Welcome everyone to the Vested Interest channel. This is Shane back with a stock pick of the day video. This will be the last one of the week here. We are going to take a look at Mitsui and Company. I think that's how you pronounce it. This is a Japanese company out of the industrial sector. It is really a conglomerate of a bunch of different companies under the Mitsui brand name there. Now, this is the vested interest stock screener. This is the criteria we will be covering in the video. It must meet 5 of 8 to make it onto my watch list. If it does make it onto my watch list, that does not necessarily mean I am interested in buying in the company. It just means out of the thousands of stocks out there, it is one that I'm interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement, stuff like their debt to equity ratios. Are they paying down debt? Comparing them to other companies, is their revenue growing? Are their margins expanding? A lot of information to look at. What is their price to book currently compared to over time? What is their PEG ratios, price to sales? A lot of good information in their balance sheet and income statements. And if you are not interested in doing deep dives like that into companies, you can certainly still invest in the market. I would pick and Warren Buffett would recommend an S&P 500 ETF or index fund, something that tracks the S&P 500 overall, something like VOO, SPY, the FXAIX. There are a lot of different ones out there that you could choose from. And again, Warren Buffett would recommend something out of the S&P 500 or that tracks the S&P 500. All right, back to Mitsui, I believe is how you pronounce it, and you can check them out on their homepage, www.mitsui.com. That's www.mitsui.com. This is a Japanese company, and again, it is really a conglomerate of a bunch of different companies under the same umbrella. Mitsui and Company, Mitsui USA greatly values its reputation for integrity and high ethical standards. It is Mitsui USA's policy to comply with all United States laws and regulations, including but not limited to those pertaining to customs, antitrust, anti-boycott, international trade controls, employment, and the environment. It is also the policy of Mitsui USA to conform to the highest ethical standards in conducting its business. Now, that doesn't really tell us much about it, but as I mentioned, it is a conglomerate of a bunch of different businesses underneath the same umbrella. And here are the industries that these businesses are in: iron and steel products, minerals and metal resources, infrastructure projects, mobility, chemicals, energy, foods and retail, wellness business, IT, financial and new businesses, transportation and logistics. So they have their hands in a lot of different business sectors. And again, if you were to go to their homepage, you could click on each one of these and read through exactly what they are doing in each one of these sectors. For example, their health and wellness, operating wellness field, which broadly covers the healthcare, pharmaceutical, and hospitality industry. Infrastructure products, Mitsui USA provides total project development and management services supported by decades of collaborative experience with regional and global customers and partners. So they're doing energy projects, they're doing renewable energy projects, mobility. Mitsui USA works closely with USA and Japanese automobile and parts manufacturers, car dealerships groups, auto finance providers, Japanese construction machinery manufacturers, major oil and shipping companies, and regional airline companies. So again, they have their hands in a lot of different business ventures under a lot of different business groups. They are out of the industrial sector. This is a conglomerate of a lot of different businesses under one umbrella. All right, we are talking about Mitsui and Company, ticker MITSF, and we are looking at them. They are down 1.4% on the day, closed up the day at $24.65. 52-week range as low as $16.70, as high as $25.43. And it needs to drop under $19.20 to be within 15% of a 52-week low. So not quite there, really closer to its 52-week high than its 52-week low. Did not have a beta listed, but you could certainly go find that if you were interested. Price to earnings is $11.85 per share. EPS, earnings per share, at $2.08. Earnings date coming up October 30th. Forward dividend is 81 cents. Now, here's where some of the numbers kind of get a little skewed. This does not match with what we're going to see on Yahoo Finance, and this is why I recommend more than 2 sources, 2 if not 3 sources, so you can make sure the information you're looking at is accurate and up to date. They're saying 0.81 cents, 81 cents, and they are a semi-annual payer, pay 2 times a year. And a 3.26% dividend yield. This does not mesh with what we're going to see from stockanalysis.com here in a minute. They're saying 0.71 cents per share and a 2.8% dividend yield. So keep that in mind. Ex-dividend date, September 29th. So if you were interested in this company, you would need to be buying them. I would say September 27th, really, or before, just to make sure, because these sell on different timelines than the regular stock market that you and I are used to investing in. because it is a Japanese company, right? As you can see, at close at 1:15, right? The real close of the stock market for us is 4 p.m. So keep that, or Eastern time, where I'm at anyway. Keep that in mind whenever you're looking at this. I would look at, if you're interested in this company and you want to hit it before the next ex-dividend date, I would buy September 27th or before. And they are going to pay out in December of September 25 here. I don't know, this dividend date is way off, way back in 2021, right? So that is not correct. They're going to pay in December. We'll see that here in a little bit as well. Looking at dividend yield theory, again, keep in mind this 3.26 does not jive with what we're going to see at the 2.8%. But if I do look at dividend yield theory according to Yahoo Finance at 3.23%, their 5-year dividend yield average compared to their current 3.26, that would be potentially undervalued ever so slightly. But again, it does not mesh with what we're going to see from Yahoo Finance. They're calling it a 2.8% dividend yield. So that would not be potentially undervalued according to dividend yield theory. Their payout ratio is low at 32.63%. So it does give them some room to continue that dividend growth. Doesn't look like they're in danger of a dividend cut. Now, going back in time, we do want free cash flow here. We want that to be growing. You can see 621 billion here in 2022, 2023 up to 857 billion, 2024 looks like it's down to 569 billion, 2025 up to 671 billion. So it does see a bit of a cyclicality here, repayment of debt. They are repaying debt, but you would really want to look at this. Doesn't look like they're reissuing or buying back shares, but they are paying down debt. But you would have to look at the issuance of debt compared to the repayment of debt to see if they are paying back more debt than they are issuing on any given year. Now, stockanalysis.com did not have a ton of data on this one. They did not have a forward forecast, so couldn't look at that. They did have return on capital employed. I like 10% or better for that metric. It was at 3.12%, so that's very low in my opinion. Needs to come up. And they did not have earnings per share or revenue growth listed, so can't look at that. Now, as I mentioned, you can see here from stockanalysis.com, they're saying the dividend yield at 2.85%, not the 3.26 that we saw with Yahoo Finance on the previous page. So they're saying annual dividend is 0.71, 71 cents versus the 81 cents that we saw. So you would want to do some more research, see which one is correct here. I did go look at a couple other sources. It does appear that stock analysis is correct and Yahoo Finance is wrong, at least according to dividend yield. Right now, I was seeing 2.84, 2.83, right around there. So I think this one is correct at 2.85. But again, I would go look at some other sources, make sure you understand which one is correct. And if it's 71 cents versus 81 cents, they're breaking that down here below. But again, the numbers did not jive between the two sources. So this is where I would say go to a third, if not a fourth, to make sure you understand which numbers are correct. Ex-dividend date, September 29th, as we already mentioned. Semi-annual payer, so twice a year. Again, payout ratio low in the 30% range. Dividend growth, double-digit dividend growth on this one, 11.98%. And you can see here they pay out in June and December. See that next payment, if you hit the September 30th payout there or buy it September 27th or before, you'll get the December 3rd. That's whenever they're going to pay out that next dividend, it looks like. And going back in time here, I would compare September to September's and December to December's to see the payouts here. So let's do that. Looking at December here, 2020, 18 cents. December 2021, 20 cents. December 2022, 22 cents. December 2023, 28 cents. December 2024, 34 cents. December 2025 is going to be 37 cents. So it does look like steady growth. And same thing if we look at June 2021, 20 cents. June 2022, 24 cents. June 2023, 28 cents. June 2024, looks like that one might have been a little bit of a downturn, 28 cents. And the fractions of a penny are a little lower, but then back up June 2025 up to 33 cents. So overall, over time, it looks like their dividend is growing. And like I said, at that 11.98% double-digit dividend growth. All right, let's run them through the screener. Again, they are a conglomerate of a bunch of different businesses under the same umbrella, have their hands in a lot of different industries. So if you wanted to know more about those conglomerate and the different industries that they're in, go to their homepage and check them out. You'll see, you can click on each one of those tabs that I showed you, and you can see exactly what they're doing in each sector. Growing free cash flow, nope, a little up and down cyclicality. Growing dividend, double digits, so a check there. Payout ratio under 75%, yes, check there. Now, I am not going to go with Yahoo Finance, because I did go and look at a couple other sources. So I'm going to go with stockanalysis.com and say that they are not potentially undervalued according to dividend yield theory. So no check there. If you want to go with Yahoo Finance and give them a check, that's fine with me. I'm not going to argue with you. It is not quite within 15% of a 52-week low. It needs to drop under $19.20. Return on capital employed was a little low, so no check there. They did not have earnings per share growth, so no check there. Looking at 3 out of 8 does not quite put them on my watch list. Does look like an interesting company. A lot of different sectors, almost like holding a little mini ETF in one individual company. Is a Japanese company, so keep that in mind as well. But maybe one for you to take a look at. Let me know what you think of Mitsui in the comment section down below. Is it one you're buying? Is it one you're selling? Maybe you're part of that downturn today, part of the selling that was happening. Is it one you're waiting for more of a pullback? Would love to hear from you in the comment section. Let me know what you think of this one. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And I have a couple other foreign businesses like this, specifically out of Japan, and one not out of Japan, that we're going to take a look at over the coming days whenever they pull back. So make sure to tune back in for that. Don't forget to hit all those other buttons down below. Share with anyone you think that might find value in the content. That really does help to spread the videos. And thank you for watching to the end. Watch time is another one of the metrics that the YouTube algorithm looks at. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Not the presentation should be considered financial advice. I'm all sharing my opinion. Invest in educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always see the advice counsel, a certified financial advisor.